It's quite interesting what's happening in retail at the moment, particularly in luxury goods. You talk in your report about growth rates in luxury being between 2 and 3% in the next 5 years. But I guess more immediately there's a challenge, particularly in China, and the news at the start of the year obviously hasn't helped that. What's your short-term forecast?
Indeed, I think China's it's a very two-speed economy. Obviously, we've got the recalibration of the economy as a whole, moving towards a more service-driven economy. And I think some of the statistics coming out of the country itself is fascinating. Really, I mean, we've seen over 140 million Chinese tourists exiting the country and spending money, and they've actually spent in excess of $200 billion outside of China, and that itself offers hope going forward for the economy as a whole. But you are seeing trends within the jewellery retail segment itself where there's a move towards lower cost items. The retailers themselves see higher value in turning over their goods faster, and that's something that shareholders are demanding from those companies as such. So what we're seeing is demand for a lower price goods that can be turned over faster and increasing that velocity of revenue.
And on consumer demand, 2015, a little bit of a mixed bag, though probably not as negative as some people were thinking. But the US clearly the main growth story. What's your view with regard to what happens this year, particularly in the US and in China?
Well, definitely. I think the US again will drive growth and give the industry as a whole the backbone to build from, and we've seen it, and your reports itself have confirmed that the US has actually increased its market share. And it was only a couple of years ago that we were talking about the US declining its market share, and the growth rates elsewhere would be far higher than the US, and therefore the US's influence over the diamond industry would be waning. To the contrary, that's what we've seen. We've seen far more resilience in the US economy, and that's something we believe will continue. You are going to see lower growth rates, but the other economies may see higher growth rates, but they're also likely to see the lower dips as well. So you're going to get the higher highs and the lower lows, and actually the US economy and the US consumption it continues to be a more constant, and I think that provides more confidence for the industry going forward, and then you can enjoy the growth rates from the other economies, the emerging economies, when they come, but also be aware that those economies snap back much harder and much faster. And actually, I think the lessons we learned from the declining Chinese demand and the over inventory, the inventory levels that were far too high in the retail segment, that caused a huge snapback in overall demand for that part of the world. So those lessons have been learned, and I think that will actually help the industry going forward, because I doubt very much those mistakes will be made to the same extent ever again.
And then the world, it's interesting. The sector talks about the bedrock that is the US, still continuing to grow very well, which is encouraging. I guess on the flip side of that, you have the challenge of, maybe India didn't grow as strongly as people had hoped last year, and the other markets aren't perhaps coming up to the same extent as people had predicted 5-10 years ago. Do you see that projecting forward for the next 5 or 10 years to still be the state of play, or do you see India perhaps booming over the next few years?
Well, I think that estimates or projections are the problem with those projections and estimates are that quite simply they are estimates and projections, and invariably market forecasters are often far too optimistic in the potential of their own markets, and I think it's not the industry's fault as a whole. I mean, what we have seen is a slowing in global growth, and the diamond industry as a whole is not going to be immune to the effects of a wider slowdown in global trade, and that's why we've seen some more concerns over sort of the fiscal growth or fiscal monetary policies, etc. So I think we have to be sort of cognizant of the fact that there's wider trends, or there's far wider influences on overall demand growth, and our estimates and forecasts are probably going to be wrong, but we shouldn't chastise ourselves too much that we were over optimistic a couple of years ago. But the world does change.